Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of December 19th through December 23rd, 2022, where we'll talk about the battle between the market versus the Federal Reserve and how we can navigate that battle without getting a black eye. Hopefully, you survived the battle of the market versus the Federal Reserve over the past week without getting a black eye, and hopefully we're successful, made some money. And again, we'll talk about some strategies, how we can make money in this battle, make money trading in this battle in the market versus the Federal Reserve this week. Thank you all for joining us in the live chat of the live stream. DS Greg, Nagam, everyone else that's joining us, and we'll go ahead and get started. David Spielvogel, welcome. Good morning. Hope everyone did well last week and hope everyone's doing well today. So here's our Google document with our notes for part one of our weekly trading game plan for this week. Again, you should be able to find a link to this Google document in the description box below. It's publicly accessible. We store our notes, our Google document with our notes for our weekly trading game plans in a publicly accessible Google Drive folder. Again, you should be able to find a link to that public Google Drive folder in the description box below, so you can reference bonus videos, tools, etc. that we put in our notes. Good morning also, Flip of the Shippo, Walter Lyons. Glad to see you all here today. Thank you for joining us. So first, some bonus videos. We just released one on what is tax loss harvesting, so you can now see that one. That one is publicly released. We kind of tried to hurry up and get some of these ready because they're very pertinent in the current time. We're going to talk about strategies both today and tomorrow in part two, relative to strategies for trading in a period of tax loss harvesting, which we're deep into. So this video explains what does that mean, what is tax loss harvesting, tax loss selling, how does it work, also how does the wash sale pertain to tax loss harvesting, etc. And again, we won't go into the details of that, but we'll talk about some strategies because again, we're deep in the midst of the period of heavy tax loss harvesting. We'll talk about how we expect that to wrap up, and then going into the beginning of the next year as well. We also have that one's unlisted. The wash sale rule is unlisted, but you can view it with this link in the Google documents. Also, we released one about the Santa Claus rally, and again, you can access that now via this link in the Google document with our notes. And then we've also talked about how to make money trading in December. So all of these are very pertinent. Again, I won't go into details of the material that's already covered in those videos. So we'll take that as a given and we'll strategize around that. So Flippa says I think the bear is back. We talked about last week. The title of our game plan was what poked the bear market. What poked the bear. So we'll talk about that and we'll look at it in just a second in the indices, etc., and see if we can figure out if the bear is back or if the bear is going to go back into hibernation, and we'll talk about what potentially poked the bear. So let's jump over to FinBiz. We'll look at the home page, see how the markets ended up Friday. Friday was quad witching. It was pretty volatile. The whole week was pretty volatile, and we'll talk about the data that came out, the CPI data, the Fed interest rate hike decision, etc. Some of the other data that kind of poked the bear and caused some volatility. But we can see where we ended up. All the indices were down again on Friday. It looks like the S&P was down 1%, NASDAQ about 1%. They were all down about 1%. Rallied a little bit into the close, but again, all negative. Many more 2 to 1 decliners versus advancers. A lot of new lows, 90% new lows. 50, it was a little over 50% below their 50 period moving average, and vast majority, over 70% below their 200-day moving average. And this indicator is showing bear. So Flippa, according to the FinBiz indicator, the bear's back, right? So if we look at some of the new, we can look at the heat map. Almost everything was red. Meta made a little bit of a comeback, but the vast majority was a little positive, but the vast majority were majorly red. Tesla big drop due to Elon Musk selling more shares. So fear of recession more than inflation. Silicon Valley needs to banks falter. Look at oil. Oil kind of declined, broke down below 75, bounced off the low 70s, I believe. We'll look at that in the futures again. Natural gas, typical volatility. We'll see it kind of barcoded when we get to the futures. Again, opportunities to make money trading, back and forth in some of these guys, no matter what the overall market's doing. Gold made it back above 1800, and again, we'll see how that's trending. And all the futures on all the indices is down. Again, with the dollar weakened a little bit and then strengthened after the Fed interest rate decision, but the euro's still above parity. Pound took a big decline at the end of the day. And then we see treasuries are still highly inverted. They're still running below the Fed interest rate percentage that we'll see. The Fed interest rate is now 4.5, and the treasuries are still below 4%, and again, heavily inverted on the near term or the short end of the curve, which indicates a recession. So again, part of this battle of the market versus the Fed versus the Federal Reserve is the market saying, we're going into a recession. The bond market saying, we don't believe you're going to go as high as what they're saying they're going to go. And so it's discounting the yields, and it has been for a while. So, we'll see kind of who wins that battle, and we'll talk about that as well. So welcome, Tony Roses. Glad to see you. Thank you for joining us. So now let's look at each of the indices. Throw up my not financial advice banner. None of this is financial advice. Nothing in any of our videos is financial advice. These are our opinions, our views. We're not financial advisors, etc. Again, this is all our opinion, and hopefully this information helps you succeed in your trading career, make money in your trading. Again, one of our philosophies is you can make money trading in any market. And different people have different styles, different situations, etc. So take this information and opinions and make your own decisions, and hopefully it will benefit you. So we look at the SPY. We can see it pretty much fell off after we had the Fed interest rate decision. Then we had poor retail sales, poor manufacturing, etc. You can see it's now broken below its 50-day moving average. So that's now going to act as resistance. So if we zoom out a little bit, and again, you could see it pretty much got rejected off it didn't quite reach the upper trend line of this declining channel, and it got rejected. And now it declined down below its moving average. So it's definitely headed in a downward direction. So again, here on the weekly, we can see it pretty much got rejected off of that 50-period moving average, and declined pretty steeply. Now it's below its 20 period moving average, 20-week moving average, and definitely on a downward trajectory. So if we look at the Qs, the NASDAQ, and it pretty much got rejected off of its 20-week moving average, and steadily declined. You can see a morning star, very bearish candle, again on a downward trajectory. And again, we're making lower highs. We'll see where the lower low is. Again, the SPY lower highs, so one could expect a lower low. So that is an indicator of a bear market. So Flippa, I think you're probably right. We're back in, we never got out of the bear market, really. We got some bear market rallies, and we've talked about for a long time how to benefit, how to play that, how to make money in a bear market. And hopefully you're utilizing those strategies and making good money. So look at the Dow. The Dow had broken out of its moving average. You can see now that 50-week moving average is providing support for the Dow. So the Dow's, actually holding up much better. It did make a higher high, so the Dow may not be in a bear market. And again, that moving average may provide some support for the Dow. Russell, again, very similar to the SPY and the NASDAQ, got rejected off of the 50-week moving average and declined. It's now below its 20-week moving average. Again, Morningstar, very negative, very bearish. So Russell's pretty much in a bear market as well. And let's look at the VIX. So we got some volatility around these events during the week, the CPI, the Fed interest rate decision. So we got a couple pops in the VIX. It never did really break below 20, never did get above even 24-ish. And so now, since there isn't any real major events coming up, we'll look at the economic calendar, see if there's anything that would cause volatility. But if there aren't any events that would trigger further volatility, we would expect it to retrace, revert to the mean, decline further, maybe at least to the low 20s, maybe continue decline. We'll talk in more detail. We made some good money trading this volatility this week, and we'll talk about those strategies more in part 2. How we made money trading the volatility, how you can make money trading volatility, just pretty much, at any time. So again, we'll talk about that in more detail. Okay. Let me grab a drink. We'll look at sectors. I'm going to talk, hopefully if I have time, I'm going to talk more about sector rotation again in the strategy section at the end of this video. So again, if you're new to our channel, new to our videos, we talk about the strategies. We collect all our data, look at all the data, and then we talk about how to utilize that data both in our strategies in part 1, and then come back tomorrow at 10 a.m. Eastern, and we'll select our stocks to put on our watch list, our top swing trading stocks to put on our various watch lists for the upcoming trading week. So we'll take all this data to help us select those stocks and select our trading strategies going into next week. So just a sec. Okay, so David Spielvogel says, how soon do you think we'll hit the lower low marker on the Q? I don't know, David. If we go back and we look at the Qs, that's a very hard thing to determine. I wouldn't say see on the daily we're real close to the lower trend line of this upward sloping trend. But then if we zoom out to the weekly, to make a new lower low, if we look at this time period, this was what, June, so mid-June to October. So, it took us a quarter to make a new low on the NASDAQ. Now, again, once we get into January, we're going to have some changing dynamics, etc. So, it may take a quarter if everything pretty much stays the same. So that would put us, from the previous low was October. So maybe, February would be based on this current trend. But again, the dynamics are going to change going into next year. So I hope that helps. So look at the sectors real quick in FinViz. You can see, go to the group tab sectors. Pretty much everything was red on Friday. The most read: energy, cyclical, utilities, real estate. Again, these sectors have just been rotating in and out. If you notice, energy's been flipping almost on a every other day basis, particularly natural gas. So, Thursday was up, Friday was down. Energy in general, I think Thursday was generally up, Friday was down. So, again, ways to make money in that sector rotation, and we've talked about that for, I guess, probably a couple months now, how you can make money watching these sector rotations. So we can see for the week, energy was up, but on Friday it was one of the biggest decliners. Um, for the week, materials, consumer cyclical, and then you see Friday, basic materials was one of the least under, the least negative. So again, for the month, healthcare, utilities, defensive, basic materials, energy was most negative. Again, they've been profit taking out of energy because for the year, and if I can get to the other thing I want to show you with sectors, we'll see energy is by far the outperformer for the year. So you're seeing a lot of profit taking and energy rotation into other sectors going into the end of the year. So. Okay, industries, you can see precious metals in general, gold, silver, which last week were pretty beaten down. Copper was a little positive. Uranium was positive. Gold. So all your precious metals, which have been pretty beaten down over the past several weeks, were positive. And then at the low end of the spectrum, I'm sure we'll see, some energy, real estate. So the REITs got beat, oil, etc. So energy, basic material, or energy and real estate. We're on the low end. We've talked about how they rotate solar up and down, be at the top on one day and the bottom the next day. So again, you can play that rotation, and we've talked about that for several weeks as well, how to make money playing these various rotations. So for the week, oil did okay, coal, etc. Coal's up and down too. And then at the low end of the spectrum, we see some materials, aluminum. I keep looking for opportunities for aluminum. It's not quite there yet again. Um, then for the month, again, precious metals done pretty well. And on the low end, we've got energy, oil, etc. Uranium, you can see, is down for the month. Again, potential opportunities going forward if they keep profit taking out of energy. We've made money on the rotation with uranium in the past couple months as well. So I hope that helps. So now let's talk about all the economic data that we've had in this battle of the market versus the Federal Reserve. So I'll let the economic calendar from investing.com come up, and I'll talk about some of my notes. So CPI data Monday, or not much. And CPI data came out just a little light. You can see it was 1/10 below the forecast, and the market wanted to rally. And we've talked about this. The market wants to rally, and that's part of this battle of. And there's tons of money sitting on the sidelines, waiting to come into something. To get some positive yields, positive return. So when we get any kind of positive signal, the market really wants to rally. So it was 1/10 below the forecast. Is still positive. That means inflation's still increasing month on month, but it was a little less than expected. Still 6% for the year. And so again, the market wants to rally. Got a little bit of positive news on the CPI, and so it's rallying. And again, we're still sitting at 7% inflation. But again, the market wants to rally. So any opportunity then in the battle, the market's going to fight the Federal Reserve and say, oh, we're going to rally, even though inflation's still very high. So Wednesday we got mortgage rates still high, increasing. Oil inventories. This was interesting. And this is something to kind of note, is in the past people paid attention to these oil and natural gas inventory data, and it actually drove the price. Nowadays, I don't think anybody is paying attention to those or really cares what the inventory numbers are. They're just kind of essentially rotating in and out of oil, natural gas. So even though the oil inventory was much higher, you got a 10 million barrel positive, and they were expecting a negative 3.6 inventory drawdown. I think oil still, the price still went up on that day, and it again tells me that it's just the sector rotation. If it's an even day, oil goes up; odd days, oil goes down, or vice versa. That's what they're doing. It's just rotating in and out, profit taking, and then running them back up. So then the important thing was we got the Fed interest rate decision on Wednesday. The Fed decided to go half a point rather than 0.75. It was pretty much what everyone should have been expecting. It's what we've been expecting. And again, whether it was 50 basis points or 75 basis points, bottom line is interest rates are still going up. And another important thing to note here is that the expected interest rate for Q4 of 2023 is 5.1. So that says they're going up another at least 0.6 or 60 basis points over the next year. Now, the year after that, they're saying they're going to drop a point. So there are no interest rate cuts in 2023. So if people are talking about or banking on a pivot, or a reduction in interest rates. And I've heard other people say that's delusional. This, and again, is part of the battle of the market versus the Fed. Is the market, is wants to believe in a pivot, wants to believe in decreasing interest rates in 2023, and the Fed saying that ain't going to happen. So we'll talk about, in this battle, who's going to win out in the long run as we go forward, and some of our previous comments on that. So some of the quotes I took out of Jay Powell's press conference, and again, we saw some pretty dramatic volatility in around when they announced the 50 basis point decision. I believe the markets rallied at that point, so we got a big green candle. And then as he started talking, I think the markets, turned red, although it's still as expected. So I believe on Wednesday, the markets, I know on Wednesday, they didn't react overly negatively on Wednesday. It came out on Thursday, and the markets really took a dump on Thursday. Now, whether this was a delayed reaction to the Fed interest rate decision, or also we'll see there were some negative retail sales numbers, etc., that came out on Thursday. And I think both of those things, poked the bear and drove the markets down on Thursday. So again, some of the quotes I took out of there was ongoing increases will be appropriate. Again, we've heard this for a while. Restrictive policy stands for some time. So again, higher for longer. Again, pointing out that the labor market's extremely tight, and that fact is going to keep them. The fact that the unemployment rate's not really increasing dramatically and the labor market's high, and that causes wage inflation and will continue to cause wage inflation, and that the labor market continues to be out of balance, is going to keep the Fed on a hawkish stance, keep them raising interest rates because they can without unemployment, which is their other major mandate. So they can keep raising interest rates as long as the unemployment doesn't get out of control. You notice, and we talked about this months and months ago, that a recession is not part of their measures. It's full employment, stable prices, which is inflation. Recession has nothing to do with it. So if they drive the economy into a recession, that's not, part of their mandate, So still have ways to go. 5.1 by the end of the next year. Not at sufficient restrictive policy. So you hear all these are very hawkish. That says they're going to keep raising rates. A long way to go to get to price stability. So they're going to keep raising rates. 5.1 may not be the end point. I've heard people forecast 6%. So, but we know they're going to keep going up at what pace and in what time frame is all that is yet to be determined, and that will be driven by the inflation data and the unemployment data. So again, GDP, recession, although the market will take those as signals of what the Fed should do. Again, that's not what the Fed's looking at. They're looking at inflation, CPI, PCE, etc., PPI data, and unemployment. So then Thursday we got continuing jobless claims. So again, very stable. So again, the job market, and then we got initial was actually down. So that says, okay, unemployment's not really going up. So again, it says the job market's still tight and out of balance. So again, that reinforces Jay Powell's statement. Then we got negative retail sales. So the economy is weakening. All these retail sales, manufacturing, etc. says the economy is weakening, but unemployment is not, starting to rage out of control, and inflation is not coming down as fast as they would like. So it says they're going to keep hiking. And then we got, okay, again, natural gas storage was, very negative, and I think still, I think the natural gas price went down on that day, and you would expect a drawdown of that size to drive nat gas prices up, and I think they went down. So again, I don't think they're paying attention to the inventory data anymore. It's just a rotation, odd days is up, even days down, or vice versa. Okay, and then I'm just seeing if we have any questions in the chat. And then, Friday we got Quad Witching Day. I think we posted in we got some news in our Discord channel. There's like $4 trillion of options expiring on Friday. So again, caused some volatility, although it wasn't really dramatic. We happened to be long volatility going into this, and it rolled over, and we saw in the VIX chart it really didn't get over 24ish. So we all during this week we didn't get a huge fear indication, a huge pop in volatility. So there isn't an excess of fear out there, so we don't expect anything dramatic. So just a reminder, as I pointed out, in our Surf the Markets channel, in our Discord, and our Discord's free to join. You can get this information. There's an invite in the description box below. Again, free to join. And in the Surf the Markets channel, in our Discord, I post this economic data, and we also now have a news feed from Market Watch Economy that automatically posts various news articles in the Surf the Markets channel, so we can see, as this data comes out, we'll get pertinent analysis. They talk about, unemployment, not quite what the Fed's looking for yet, sales at retailers. I won't go into detail. We talked about the trend in retail. The decline in retail sales doesn't really surprise me all that much. I think the smart people bought their Christmas presents early because of inflation, and we talked about that probably 6 months ago. So I kind of expect the Christmas holiday retail sales to be disappointing as well. So I hope that helps as well, and you can trade accordingly. So again, my opinion, but I think retail sales for the end of the year are going to be disappointing. So now let's see what we've got for next week coming up. Monday, housing data. Okay, we heard Jay Powell say they'd really like to see housing prices come down, which means they'd like to see housing starts go up. I don't think that's going to happen. We're hearing from like Lennar and some of the home builders that, again, they're not going to build houses because people aren't buying houses. So, and people aren't selling houses because they can't afford a mortgage at the higher interest rate, so they're not going to sell. So again, I don't think that data is going to be positive in terms of Fed decisions. We get typical inventory on oil and natural gas. We get jobless data on Thursday. Again, that might cause some volatility. We get some GDP data. Again, this is going to cause market volatility. But again, the Fed, it's not going to change their decision. What's going to change their decision is unemployment and inflation. So then Friday we get some economic, we get PCE, so there's some inflation data. If that's better than expected, again, I would expect the market to try to rally on that. So, and we get sentiment data again, give us a view as to the consumer's view of this. But again, that's not something I don't believe the Fed really pays a whole lot of attention to that. It's the core data. This will be interesting to see if the oil companies actually start decreasing their oil rig count because of the increase in inventory. That'll be kind of interesting. So I hope that helps. We'll flip over to the earnings calendar real quick since we're here. Should be wrapping up most of the earnings for next week. So we've got some energy, some retailers, some gold. So you can see this. So gold miners, that'll be interesting if they outperform. The gold's been, in the 1700, 1800 range. So some of the miners should be doing pretty well. So again, you can go through this. It looks like it's pretty much we got lending trees. So there's a finance one. So you can look at this in more detail, and I'll show you also in Webull where we can see a near term. So Flippa says, yeah, retail holiday sales are weak. Yeah, again, I'm not overly surprised at that. Again, with high inflation, the smart people bought early because the prices are going to go up in the future. And there's other issues as well with the retailers. And again, we've been talking about this for a while. So the next FOMC meeting isn't until the end of January. So we don't have to worry about an interest rate hike again until the end of January. So at least that's going to be pretty stable. Now, Fed officials will start coming out and talking again. Now they're out of their quiet period, and I expect them to, reinforce their hawkish stance because, again, the market's out of sync with the Fed. That's part of this battle. The market wants to do one thing, it wants to go up, and the Fed doesn't want it to go up, really, because that has the potential to cause more inflation. Right? They call it the wealth effect. People, when the market goes up, people feel wealthier. People that are invested in stocks, etc., and so they go out and spend more money, and that causes inflation. So that's the wealth effect, and that's why the last FOMC meeting, when the guy asked, oh, hey, you just raised rate and the market went up, you got a pretty negative reaction from Powell. So, and they're not making their decisions based on what they want the market to do, but they certainly really don't want the market to go up and create this wealth effect, which has the potential to create inflation. So trade accordingly, right? Okay, let me grab a drink. We talked about earnings calendar. We'll jump over to Webull and look at the market screen, and we'll talk about futures, and then we'll talk about strategies. Okay, so just a quick reminder, they're still offering 12 free stocks with Webull. So again, Webull's our favorite trading platform. As you can see, we use it for market analysis, due diligence, most of our trading, and you can still get 12 free stocks if you don't already have a Webull account. It's, again, our favorite platform. And again, you get 2 free stocks for just opening an account, and then up to 10 more free stocks for depositing any amount, even a penny. And each of these is worth somewhere between $3,000 and $3,000. So again, if you don't already have a Webull account, we prefer Webull. We really like the 4 a.m. to 8 p.m. trading, and there's some unique opportunities with like ETF rebalancing, etc. I also noticed the way they rebalance the VIX and the opportunities that offers in some of these ETFs. That was a benefit of being able to trade in Webull as well at 4 a.m. So here's the market screen. I'm using the online browser version of Webull. I use both this and the desktop version. I don't use the mobile version right now. But we can see in the market screen, it was actually pretty, 2-to-1 decliners to advancers, but the majority of the declines were very small, quite a bit neutral, and the small number of advancers. The tails on both ends are pretty small. See again this week, the NASDAQ outperformed the NYSE, so that's been 2 weeks running that the NASDAQ has been outperforming. Prior to that, NYSE had been outperforming for quite some time, so that's interesting. So again, I mentioned here you can click on calendar, you can get the earnings calendar, you can also see dividends and splits here, and it'll show you near-term earnings, so who's coming up, whether it be AMC after market close, BMO before market open, or it'll say during market. So I find that helpful as well. Let's look at the best performing industries for the week. So coal did well, oil, again, energy did well. So all the energies, home building about split. The uranium was pretty neutral. So again, I think, there may be in the near future some opportunities in uranium again. Solar, renewable energy has been running up and down. Maxar, we heard the buyout of Maxar at a high premium. That's a satellite communications company. We'll talk about that some tomorrow as well. Biotech was pretty split. So we'll look at the ETFs. Good morning, John. Welcome. Thank you for joining us. So again, short on the S&P, bear, short on the Qs, short on the Dow. So yeah, it's not surprising. So everything's pointing down right now. So Dow short S&P. I would expect, let's see, it doesn't really, midterm futures, short on the Russell, small cap. So that's a bear, so short on small caps. So last week we saw some positivity in mid caps and small caps, and now it's very short, so very negative. Industries, mostly red. Basic materials a little bit positive. You can see mostly uranium, copper. Again, this is all from Friday, so again, mostly red, some defensive, consumer defensive. Even financials was negative. So positives with commodities, livestock, gold, biofuels, gold, cotton, all weather inflation was negative. So bonds, what do we got for bonds? 7 to 10 years, pretty positive. Asia, positive. 3 to 7's positive. Okay. So now we'll look at the futures, and then we'll talk about our strategies. Well, thank you, Tony. I appreciate it, and welcome. Greatly appreciate the positive feedback. I hope so. We're trying. So just a reminder, if you all like this type of information, please smash the like button. Help us, get the YouTube algorithm to spread this information to more traders around. we want people to come back to the markets, learn how to make money trading in any kind of market. That's our objective. So tell your friends, share this on your social media. Let's build our community for the mutual benefit of all of our fellow Beach Bum traders. So somehow, we want to spread the word further, and any assistance y'all can provide in that would be greatly appreciated. So thank you again for all the positive feedback and support. So if we look at the futures, again, down, we see pretty much, everybody just kind of fell off, fell off, all very negative, making lower lows. So you can see in the futures, Flipper, whoever asked about, when are we making lower lows? Here, the futures are making a short-term lower low already. So, but we see, it's got quite a ways to go down. Dow's, holding up a little bit better, but yeah, it's very, very bearish, very negative. Russell's pretty much fell off, gap down. Look at Europe, it's gapping down. So we see the VIX, kind of tweezer bottomed a little above 20, bounced up to 22. Again, we expect it to roll over. There wasn't a real big surge in the VIX, even though we had that $4 trillion of options expiring yesterday, as we still didn't get a lot of volatility. So we would expect it to roll over and trend back down through the end of the year, because there isn't a whole lot to cause it to perk up through the rest of the year, unless some kind of black swan happens. So oil, you can see, it's kind of been bouncing between 70 and 80, 75, 70 to 75. Right now it's downtrending a little bit. You probably saw the news in I think it was in our Surf the Markets reports, as well as Biden started replenishing the strategic petroleum reserve. So they were saying they were going to, that they were going to start buying at about 75 or so. So that will provide some support in oil prices. And again, we'll talk tomorrow as well about opportunities, ways to trade these various commodity trends, how we're currently trading them, and how you can make money on these trends going forward. So we saw, again, gold looks like it's got pretty good support just below 1800. It's holding up now above 1800. See, the overall trend is up. Same thing with silver. Silver's a little more volatile. So, it took a drop and then bounced up, got a hammer candle. So that's pretty positive. It's interesting. Palladium really dropped off. And again, we'll look at some ETFs tomorrow, potential opportunities in the various commodities, see if we can play any of these gaps profitably. And then I didn't see Tanbeer offhand in the live chat, so raise your hand, Tanbeer, if you're here. He tends to be our bond guy. You can see, the bond prices kind of peaked on probably about Thursday or so, right after the Fed interest rate decision, and then declined a little bit on Friday. They're still trending up, but they might be peaking out. And again, the bond yields need to go up to match the Fed, or to get closer to the Fed interest rate. So yeah, and Tanveer, I know, likes TLT. We're long TMF, which is again long on price, short on yield. And again, the yields need to go up. So we would expect at some point to be a slight reduction in price. But the flee to safety, risk off, people will pour money into bonds. It drives the bond prices up. Even though, again, the yields need to go up, and therefore prices would need to come down. So we saw the dollar had been declining and then took a little bit of a pop on the Fed interest rate decision. And again, we expect it'll stabilize and probably continue on a downward track unless something else happens. So. Okay, so let's talk about our strategies, trends, strategies for this week. And again, We'll apply these strategies in selecting our individual stocks tomorrow. So again, in this battle of the Fed versus the market versus the Federal Reserve, we're going to have this ongoing battle. The markets want to go up, again, the Fed doesn't necessarily want the market to go down, but they don't like the wealth effect that it creates if you get excess exuberance. So again, you can get a negative reaction from some of them, especially when these guys come out and talk and they think the market's not listening to them, not getting it, that interest rates are going to go up, things are overinflated, overpriced, and that's inflationary, and therefore the prices and these PE ratios, etc., need to come down some, which means the market needs to come down. So again, if the Fed officials think the market's not listening to them, they may feel they need to be even more hawkish. So in this battle, I wanted to resurrect one of our old game plan videos back from last April. I almost used this title again. I noticed I'd already used it, but the message is the same. Don't fight the Fed. Really, this is a long-term message is you can't win in fighting the Fed. They control the monetary supply. They control the interest rates. They're going to keep pushing interest rates up until, the market listens and pays attention and inflation gets back under control. So until that happens, and along the same lines as don't fight the tape, is the way to make money in the markets is make money with whatever the market gives you. Is don't fight the tape. If it says the market's going down, then we can make money with the market's going down. If the market, is going to take some of these data points and want to try to rally, hey, we can make money on those rally points. So if it just wants to chop around and be volatile, we can make money on that volatility. It's just a matter of let's read the tape, let's make money, let's take what the market gives us and make money trading any market. So again, don't fight the Fed, don't fight the tape. There's plenty of ways to make money. And again, we'll talk about more strategies again tomorrow about, what exactly to trade to take advantage of those particular trading technique strategies. I see Tanvir did show up. Yep. And yeah, bond prices need to come down. Yields need to go up again. But again, this flight to safety, risk off, we'll see prices go up periodically, and then there's opportunities in all of that as well. So let me grab a drink a second, and we'll talk about some of these other strategies. Again, I want to talk a little bit about tax loss harvesting in the current time frame. So. Okay. Just a reminder, you can now see this video on tax loss harvesting. It explains how it works, a lot of the details, the time frames, etc. Also, the link to this wash sale rule video that we have that's currently unlisted. Highly recommend that if you're not familiar with these concepts that you view those videos. Get a good understanding of how all this works, how tax loss harvesting works, tax loss selling, and be very familiar with the details of the wash sale rule, particularly if you are looking to potentially harvest some tax losses, take advantage of some tax losses in some of your trades for this year and offset some of your gains. You definitely want to understand the wash sale rule, and you don't want to violate that or it will negate your opportunity to take those tax losses. So, please get a good understanding of those, and hopefully these videos will help you. The important part about tax loss harvesting, again, there's a 30-day window. That's the wash sale rule. So you can't sell something and then buy the same thing or something that's essentially equivalent back within 30 days, or you negate your tax loss, your tax advantage due to that sale. And therefore, starting in the early December, you start to see tax loss harvesting of the biggest losers. People that had the biggest losers, they're going to harvest those to take those losses to offset some of their gains. That's going to go through. Probably, I expect it to kind of start to wrap up mostly by the end of this week, because then we get into the holiday week next week. So next week on Monday, the market's closed for observance of Christmas. So I expect by this Friday, the tax loss harvesting, the vast majority will have wrapped up. Now that's going to continue to put downward pressure on anything that's a big loser for the year. So again, we'll talk about this in more detail tomorrow about what do you want in your shopping list? What do you want in your watch list to not get caught in the downward pressure due to tax loss harvesting? But again, I expect this to tail off the farther we get into this week, although again, it may be heavier. Friday was the big day because there was a lot of liquidity in the market. There was mention, the talking heads, etc., said, that was the last big liquidity event for the year, as you had the quad witching $4 trillion worth of options rolling off. So that was the opportunity of the big players, institutions, money managers, etc., to take their tax loss harvesting. And therefore, I'm sure that contributed heavily to why we were down significantly Thursday and Friday, was probably a lot of tax loss harvesting. So again, we're going to continue to see some downward pressure on losers going throughout this week, and then that should abate when we get in the holiday week. Again, we'll talk about this in some detail, and then we'll also talk about Santa Rally and see if Santa Claus is coming to the markets this year or not, or if everybody's just going to get coal, or if the Bears are going to deliver coal. So again, you can also access that video about what is a Santa Claus rally. Is it real? What exactly is it? Why does it occur, etc. That's all in that video as well. So I'm running out of time, but I will let's talk about a few other things. One thing I wanted to share. Let me go back to the tax loss harvesting thing. Is most of our trading is done in retirement accounts where tax loss harvesting doesn't apply. But if you do have the potential of taking a tax loss, harvesting a tax loss, offsetting a capital gains for your taxes for this year, again, these videos will give you information. But if you need more information, we recommend Mark J. Kohler, a KKOS lawyers, tax attorneys, and you can find the link here to Mark J. Kohler. And also under our business resources category on our homepage. Homepage is beachbumtrading.com. Find the links section. You'll find all of our social media sites, invite to our Discord, the platforms we use, tools, etc. And you'll see in a second where I added the one someone recommended. And under business resources, you can find the link to Mark J. Kohler. We use them for our retirement consultations, advisement. They're very good. They're very responsive. They are not cheap, but they're very good. I just recently contacted our tax attorney this past week or so, and I got a response, a very helpful response within a day. So if you have any further questions about tax loss harvesting or anything having to do with your taxes, your small business structure, etc., we recommend Mark J. Kohler, KKOS attorney. So I hope that helps. And yes, this is a referral link. So if you purchase something from them, we will get some small compensation for that referral. So, but again, irregardless, they've been very helpful to us. The other thing I wanted to mention is Blind Jedi posted in the Trader TV Live Discord a helpful link that shows this National Association of Active Investment Managers, and it shows, are they loading or unloading? And I thought that that was useful, so I wanted to share that with you all. And it is also posted now in. I put that in the link section on our homepage as well. I'd have to find it again. I think I put it under resources somewhere. If it's not there, I'll make sure I've added it. But I thought that that was interesting, and you can read this in more detail. Access it via the link on our homepage or on out of the notes section. Again, it will explain, our money managers loading up or unloading in the market. So again, that would tell you, support or selling pressure. Another one I wanted to quickly go through, and again, we'll probably do this again. I've done this before, and we have a video on how to use the Sector Spider Tracker tool, and it's also in the link section. But this is very helpful in finding sector rotation, and what I would recommend is you take a look at the charting feature. What I was doing is looking at the 1-year returns, and you can click these on and off and show the various sectors. If we put energy on, you'll notice how energy is outperformed. It's up 60% for the year, and pretty much everything else is negative. So we can see, how they rank relatively. You can zoom in for a particular period of time, so we can see, sector that's near an extreme, and also how they're performing. So here we had the financials was down and it bounced, and now it's down. Maybe it'll, bounce again. So again, I would expect profit taking out of the high flying sectors and rotating into the most underperforming, which is probably communication services. Right now, you can also compare it to the index. So we can see most of these are pretty much tracking the S&P 500, except energy, which is way up. See technology. Again, they're pretty much very close. All of them are hugging the S&P 500, except for energy. See how basic materials is doing. Again, it's not very positive. So again, you can keep an eye on this in various time frames for a week, for a month, for the year. And again, we can see where this rotation is. And you can turn these on and off. So we see, okay, energy was again, outperforming everybody and outperforming the S&P. So again, you can find that link as well. It's under the tools on our webpage under links, and again in the notes section. But again, another way to check for sector rotation, to take advantage of these sector rotations as they, day to day go rotate money, take profit out of one sector and flow it into the least performing sector. Again, we'll talk about ETFs again tomorrow on ways to take advantage of those kinds of sector rotation. I'll talk about the volatility one again in additional next week, maybe tomorrow as well. We will talk about our trades, trading volatility the past week. It was a nice profitable opportunity the past week trading volatility. So maybe we'll talk about that more tomorrow. So I've got a couple minutes. If anyone has any questions, if I missed your question, please throw it back up in the chat, and I'll try to address it. I apologize if I missed it before. Yeah, I'm glad you like it. Yeah, that's very useful. The Sector Spider tool. And again, take advantage. There's ways to make money, using that. and the other ways we've talked about finding sector rotations and longing the one they're flowing money into and taking profit in the one they're flowing money out of. So okay, we'll wrap again. If you like this type of information, we'd appreciate your comments, your feedback in the comments below in our Discord. Again, our Discord's free to join. The main channel people typically hang out in Beach Party, so you can join us there. We have a Facebook group if you prefer that. Also, you can always contact us via social media with any further questions. Contact us via our Discord, social media, etc. And we hope you all come back. Well, we hope you all share this information with all your fellow traders. Invite them to our Discord. Let's build our community for the mutual benefit of all of our fellow BeachBum traders. And come back tomorrow for part 2 of our weekly trading game plan for week of December 19th through the 23rd. And again, we'll apply all this market analysis, all these strategies, etc., to select our top swing trading stocks to put on our watch list to potentially trade next week. And again, we'll talk about more detailed trading techniques, strategies, etc., to make money trading in the current market or in any market. So again, come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern time, and we'll do part 2. And in the meantime, have a great rest of your Saturday, and we'll see you all tomorrow morning. Thanks.